Welcome, everybody. This is Peter Schiff. It is Thursday, and buckle up your seatbelts here at the Peter Schiff Show. We are watching the Dow Jones in a fast market. We are almost down 500 points right now. The Dow is down 492. The S&P Composite, the NASDAQ, down 132 points. This is the biggest move in the NASDAQ in one day, I think, in this decline. Well, I think there might have been one time, it might have been down 150 on the day the Dow was down 600. I can't remember, but down 132. S&P is down better than 50 points. Gold going the other way. Gold up $35, a new record high in the price of gold. Also new lows. The 10-year yield all the way down to 1.99%, below 2% for the first time in this move. The 30-year down to 3.367. The Swiss National Bank was in overnight intervening, selling Swiss francs. The Swiss franc is basically unchanged, as is the Japanese yen. But I think one of the reasons that so many people are piling into Treasuries is because other safe havens, like the Swiss franc and the Japanese yen, are kind of being taken out of the mix because central banks are undermining them to prevent the safe haven flows. So money is going into two places. The smart money is buying gold. The dumb money is buying Treasuries. But everybody right now is selling stocks, also buying the dollar. Other currencies other than the Swiss franc and the yen down across the board. The commodity currencies all down. The Aussie dollar getting hit today. Canadian dollar getting hit. Both those currencies down pretty big. Euro down, although not as much as the commodity currencies. And British pound actually holding up pretty well. Probably other than the Swiss franc and the yen, the British pound is the currency that is doing the best against the dollar today. The catalyst, I think, for the sell-off in the U.S. was the sell-off in Europe. And the news was there was an unidentified European bank that needed to borrow $500 million, not euros. And this has spooked the markets, and that got Europe to sell off. The banks, of course, in the U.S. among the hardest hit today. Both the banks and the financials are leading the markets lower. leading the markets lower. Excuse me. That's a problem. Gold stocks are down on the day. The Huey is down not nearly as much as the Dow. The Dow is now down 506 points. Gold stocks are down just under 1%. But that's despite gold being up $30 to a record high. Silver is actually up on the day. It is not down. But the gold stocks, you got Newmont is up 3 cents. Now it's UNCH. That was like the only green one on my screen. No, Yamada was up a couple of cents. Franco-Nevada up a couple ticks. But that's in Canadian dollars. In U.S. dollars, Franco-Nevada is actually down. So very little strength. But again, these stocks are simply following the weakness in the stock market. They're not paying attention to the fundamentals. So the fundamentals for gold stocks are improving today, especially with oil down $3 a barrel, back down below 85, trading in the 84 handle. And the dollar index is back up above 74 because of today's strength. But the dollar had been very weak leading up to today. The only thing that gives the dollar a boost is when everything is selling off and the Treasuries act as a safe haven, which eventually they will no longer be because there is no safety in Treasuries, especially if you look at the economic data that came out today. First of all, the unemployment claims backed up more than expected, 9,000 additional claims, back at 408,000 claims. It's the highest weekly unemployment claim in a month. So bad news on the jobs front. The inflation numbers are even worse. CPI came in higher than expected. Consumer prices in June up 0.5% for the month, which annualizes out right to around 6% inflation. If you go backwards for the last year over year, the CPI is up 3.6%. Now, contrast that to a 10-year Treasury yielding 1.99 and a 30-year Treasury yielding 3.4. The Treasuries are yielding less than the inflation rate. And, of course, the yield is taxable, so it makes no sense. Also, think about this. When Richard Nixon imposed wage and price controls, It was when the CPI got to 4% year over year. 4%. We're at 3.6. And, of course, if we were still measuring inflation the same way it was measured when Richard Nixon was in the White House, we'd be at 10% or something like that. But even with our own ridiculous measures, inflation is 3.6, and we don't even care. And it was only a little bit higher, and it was such a national emergency that Nixon imposed wage and price controls. Now, I think that was the wrong thing to do, but at least it shows that the government was concerned about 4% inflation, even though the drastic measures that they took were foolish. Today, the government isn't even concerned at all about 3.6% year-over-year inflation. Now, the core was up only 0.2%, but year-over-year it's up 2.5%. That's the fastest increase, I think, in 2 or 3 years. So core prices are moving up, headline prices are moving up, and the madman, money printer Ben Bernanke, is saying he's going to keep interest rates at 0 for another 2 years, even though inflation is getting worse. And even though inflation is getting worse, people are buying treasuries, which makes no sense because the biggest threat to a treasury buyer is inflation. Right? Inflation erodes away the value of bonds. Anyway, I'm just having a lot of computer problems here. I don't know if there's any. I can't see the caller screen, so I have no idea if. Hold on, let me try to log it in. We're just changing a lot of equipment here. We still don't have the new camera working. Still using the old camera, but having some growing pains with this new equipment here. But yeah, so on a day when inflation is higher than expected, the fact that people are buying U.S. Treasuries shows you that they just have no clue what they're doing, right? It's just a bunch of traders, people bailing out of stocks. They don't know what to do. They pile into Treasuries. And people keep talking about the bubble in gold. The bubble's not in gold. The bubble is in U.S. Treasuries. The number of people buying gold is tiny compared to the number of people who are buying Treasuries. But the thing is, even though so few people are buying gold, look at how much the price is going up. Imagine what's going to happen to the price of gold when all the fools who are rushing into the Treasury market because they think it's a safe haven, what's going to happen when they realize that that's not a safe haven and everybody starts trying to buy gold? Imagine what's going to happen then to the price of gold, because it's going up the way it is when only a very small fraction of the investment community, of the general public, is buying. The overwhelming majority are just foolishly buying U.S. Treasuries, following the blind, leading the blind over the edge of a cliff. Anyway, I thought I heard sound. I don't know. I mean, I can't really tell what's going on here. But anyway, let me just move on to the next topic, and if I get cut off, I get cut off. I talked yesterday about S&P downgrading U.S. government, not about the SEC investigating S&P looking into the way. Oh no, there's the music. So anyway, I'm going to talk about this when we get back for the break, because the government is escalating their scrutiny on S&P in retaliation for the downgrade, and that's exactly what I was warning. If you remember on this show, I said I thought there was a quid pro quo going on between the government and the rating agencies, that the rating agencies don't downgrade and they don't get prosecuted. Well, S&P downgrades, and now the Justice Department and the SEC are all over them. Anyway, don't go away. We'll be right back here on the Peter Schiff Show at SchiffRadio.com.
I'm a rainbow too. To the rescue. Here I am. Want you to know, Lord.
The Peter Schiff Show.